Welcome, everyone. I'm Greg Schnell, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on stock charts, we'll be looking for long time frame trades. Please subscribe to my articles and Twitter feed. You can also enter comments in the chat room for me to answer at a later date. And stay tuned. Right at the very end of the broadcast, we'll have a special announcement. So just be aware that that's coming. And let's kick it off. So we got lots going on here. Every time we get a tweet, we get a 100-point move. But I think more importantly is, to me, the trend is decidedly down. I think I've been talking about that for a while now, but we want to create a utilities consumer staples chart list just so you can shop in, I'll call it, in safer domains for a little while. And one of the things that's a bit surprising is Australia continues to make new highs, like rest of world nowhere near that. But Australia is just shooting up, and I know they just had an election and that kind of stuff. So maybe it's election related, but anyway, the chart is a standout and it's all alone. Brexit blues. So obviously, Theresa May retired, and now we've got more issues around the UK. So that's an interesting one. And Japan speeds up their ETF buying again. So back in December, Japan had bought like $5 billion worth of ETFs to kind of keep holding up their market. Well, they're on pace to buy even faster right now than they were in December. They got another 5 days to go. They were buying again this morning. So lots going on in Japan, just trying to hold the market up there. So we're going to keep watching that out of the corner of our eye. So I want to start with this chart. And this chart shows, well, that's a little large. This chart shows, I could just change two things. There, now it fits nicer. This is the S&P 500, the NASDAQ composite, and I need a restart of my computer. All these things are changed. The S&P 500, the NASDAQ composite, and the Russell 2000. And the important thing to realize is the S&P 500 is at a really important support level. The NASDAQ is at a really important support level. And the Russell is stuck below an important level. And above this lower level, call it 1450, just to pick a number. Anyway, all of these markets are trying to hold on dearly, and we'll see what happens here. But I keep finding the breadth weakening, and I'll have more on that in my market roundup this weekend, which publishes Saturday evening, so you can catch it roughly after 6 p.m. And then it would be available all through Sunday, and I'll write an article for you on Sunday that kind of goes with it. But if you just want to get the video right off, that'll be on Saturday evening. So this chart makes us just be aware of how sensitive the issue is here. If we start to break down again from these levels, obviously that's a problem. This 2800 is trying to hold, and on a daily chart, it looks like a head and shoulders structure. So that's concerning. Clearly, though, everything is pulled back from the highs. We're 600 points off the high on the NASDAQ composite, and on the Russell, we're 100 points off the high. So a little bit off the recent high, a little bit concerning there, and we want to just keep watching how these markets are behaving. So one of the things I like to do, and I've shown you the new gallery view before, but basically you put in the two ticker symbols, and when we do that, we get them side by side. So this is a 10-minute chart of the Dow and a 10-minute chart of the New York Composite. And we could do this for any stock. I just want to show how the tool works. But here's the Dow Jones Industrial. And you can see flat line 200-day moving average for almost, well, October to May now for sure. And same thing for the Russell or the New York Composite. So between the two of them, we're not going anywhere fast is kind of what the moving averages are telling you. On the weekly chart basis, the Dow Jones Industrial continues to struggle to get through this prior high. And on the New York Composite, we're making lower highs. And now, again, everything just trying to hold on to the 40-week moving average. We're getting sell signals on the PPO rolling over, and full stochastics below 50 are usually a problem. So we're right at the level where if we were going to bounce, this is kind of where we would expect to hold up. I'm not expecting that. So on a point and figure chart, this is very close to making a new a lower low, so that would change it from being on a buy signal to a sell signal. And it went on a buy signal way back here in January when it went above the prior high, and then pushed up, pulled back, but didn't make a lower low, and then went to a higher high again, pulled back, and now we're sitting right at this prior level. So this point and figure stuff gives a wide range for the market to work without changing from buy and sell signals. But when it does, it's a pretty big signal. So we're watching that very closely, and the big thing to watch here is, do we start to make a lower low? So we'd have to get down to 25,115 in order to do that. And then over here on the New York Composite, we're a little bit above, but we'd have to get down to 12,390, 12,270 or 269 to make that happen. So we have to get all the way down here to make a lower O. If we just make an O in the same area, support is still holding. So that's what we want to look for. And again, because we failed to take out the prior high here, so this was a higher high, but we're lower than those ones. So we were on a buy signal, even though we weren't above the previous all-time highs. Does that make sense? So it's just the previous column of X's gets you on a buy signal, and now the previous column of O's would get you on a sell signal. So it gives the market room to work, in this case, roughly 12,270 to 13,023. So, almost 1,000 points, 800 points to work with. And in that move in there, the market can kind of go back and forth before you're changing your buy and sell signals. But essentially what we've got is a market that's really trying to hold on desperately here. And all of my information, advanced decline line work, a whole bunch of different groups I watch, all of the momentum is rolling over and giving a sell signal. Okay, so one of the things that's really simple to do in the scan editor is to go in and create a scan that just goes in and gets an individual group. And this doesn't have to be very fancy, but as an example, I had a group set up here, and it was group is biotechnology, and then I wanted the percentage change to be greater than 0.16 over the last 20 days. And what I was looking for was something that was outperforming the S&P 500 at that time. So if I knew how much the S&P 500 had performed, I could just go in and change this. And I think right now for the month it's down, call it 2.5%. So we could just go in and say, looking for something that's not down as much, or something that's still positive while the S&P was down. We could scan for that. Or in this case, I've decided to just mark those out and take something very simple and say group is the utility sector. And if you use the words and here, obviously you can't be in group one and group two, which is the consumer staple. So you have to use or. And then inside that group, what we want to do is we want to pick a price, and the price in this case I've picked is greater than $3. You don't have to be, if you like penny stocks, you can say under $3. If you like whatever, you could choose the level you want. I just picked $3 because I really don't want to deal with stuff around a buck. Rank by SCTR ranking. And then in that particular case, what it's going to do is it's only going to pick stocks that are either in the large cap, small cap, mid cap area, and it'll ignore everything else that's really tiny. So by ranking by SCTR, it's going to put all of those stocks first, and then anything that doesn't have a scooter ranking, it's going to put it below that. So this just allows a relatively simple sort. When I did that, let me just show you in summary mode. So what happened in summary mode was we get this chart list, and it comes up and everything is ranked by the scooter ranking here. And obviously, let me just hit scroll. If we go to the bottom, stocks that don't have a scooter ranking still show up, but aren't ranked that way. So we could rank them by RSI, we could rank them by volume, we could rank them by anything else that we wanted to, or we could just group them in their sectors and industries to try and help sort through them. But the point I want to make is that it's very easy to go get a chart list in a couple of minutes and just focus on defensive sectors and at least be aware of what's going on there. And if you weren't already in defensives, maybe how you would go about getting there and what you might look at. So that's the purpose of today's price action, or today's show, watching price action. And here's Goodyear as an example. So it's got a scooter ranking of zero point 0.8. What that means is 99.2% of the stocks have better price action than Goodyear. And that's of the, I'll call it large cap 2000 stocks. So here we go with Kraft and 2.1 Rite Aid. So this isn't the place to focus. I mean, these are so weak. It's just really not that great. And we all know that PG&E has been working hard. Now, maybe this stock finally starts to move, but I think as long as it's sitting here as one of the worst performers, it's probably not the place you want to go. And here's Herbalife, and we all know this, the background on the battle in Herbalife, but that stock is down, 30% since the beginning of the year when everything else has been going up. So anyway, looking at the bottom of the list, I think it becomes obvious why we don't want to be there. Now, if these stocks start to improve, let's say their scooter ranking gets from the bottom 25% and starts to turn up, they're probably, like in this case for CVS Health, it's probably going to start to break above that May high, and that would be something worth watching. Again, we're not trying to bottom fish here. I think when the market's behaving defensively and you want to, defensives have been outperforming for a month, but you want to stay in the stronger stuff, even in the defensive. So I don't think you want to just go into defensives randomly. You want to try and find something that's working. So we're not going to spend much time down here on the bottom of the list, but the reason I want to show it to you is this list quickly shows you, without having to go in and look at every chart, what's lousy, and we can focus on the top of the chart, not the bottom, or the top performing charts. And here's one that I actually thought would be doing much better with, I know the farmers have had tariffs put on them, and there's some support for the tariffs from the government coming in to help the farmers with the problem. But the one thing I thought that might happen is we might actually see that improve for the agriculture community. Has not shown yet. So to me, it's still an avoid. And then if we, here's Del Monte Products, that's pretty, these charts are drilling in the bottom corner. Now we want to go to here's TAP that we've heard about, brewery. Well, that doesn't look like a chart I want to own. Here's Kellogg's. And again, these things aren't great. Hormel Foods, after a big run last year, these have pulled back a lot. If they start to perform, then you can get into them. Hormel here is at 30, so you can just start to see how they start to improve as we get up here. Here's Revlon, so cosmetics, and you'd think maybe that might be defensive. Seems people would still buy that, but not here. Anyway, back to the top of the list. What we've got at the top of the list, let's just go in and actually look at the charts, and we're just going to go 10 per page. And again, I've sorted this on scooter ranking, so this top little box here should be right up at the top, and then you're going to see that this gets weaker as we go down the list. But here we had a nice breakout on this, and I don't even know who this company is, Food Products, but JBSAY, and it's an OTC ADR, so I think it's a foreign company. But what you look at here is this thing's really been moving nicely, and normally I wouldn't look at OTC products, over the counter market, but this is looking pretty good. Now this Cody is really interesting, and one of the reasons I like it, see how the scooter ranking kicked up, pulled back, and then restarted? I see this a lot when a bull market starts in something, and so this is one of the stocks I'm more interested in. And again, I'm not in tune with everything they sell, but again, it's listed as a consumer staples personal products company, and it's been tracking sideways all the way through the beginning of the year, and then last week it started to kick up, and so it's at least worth watching. And if this is going to continue this momentum off last week's kick, might be time to look at it. Here's Tyson Foods, and it's exactly the opposite of Hormel and some of those other ones we saw at the bottom of the list, but this one's breaking out to brand new highs. So even though it feels extended to me, it's probably at least nobody up here trying to sell, because everybody's in a profit position. So there's hope there. And you can see the scooter ranking just started to move up. And then during the defensive market periods, this can actually stay up here for quite a while. And it doesn't have to actually have the stock going up. It just has to be outperforming everything below it, right? So that's important. Now, this Avon products, this is a really interesting chart. This is making new 2-year highs this week and just trying to get going. And look at the volume that's come into this thing. So somebody's obviously setting up for work here. This volume is going back, what, 5 years that we haven't had a bar that big. So obviously something going on there. So perhaps that's worth a look going in to see it. And again, it's a $3.50 stock. We're not exactly going to change the world with it. But if this thing could ramp up at all out of this base and get back up to 6 or 7, while the rest of the world's pulling back, and you found a growth stock, that might work. Here's consumer staples tobacco. Not going to work if you're a specific type of investor that wants to focus on good things. But this tobacco stock clearly pushing to new highs here and keeps working. So here's Pilgrim's Pride. Chart looks good. Maybe rolling over a little bit or stalling for a bit here. Give it a chance to pull back and find an entry maybe near the 10-week. BRF Consumer Staples. This one's making new 52-week highs, so that looks pretty good. Same thing, scooter ranking pushed up, pulled back, and now is starting to soar like that. American Waterworks, nice continuous uptrend, safe, easy, pays a dividend of 1.6%. Coca-Cola, don't like the shape of that last bar, and it only pays a yield of 0.32. So if I was going to be in defensives, I'm expecting a bit more yield. Hershey, 2%. Look at this thing. It's gone from 110 to 130. I'm a buyer of chocolate. I don't know if I'm a buyer of the stock after that move already, but here's Fresh Pet breaking out to new highs. So that looks good. That there was a pet one on the bottom of the list. So it's not all pet stocks that are working, but this one appears to be doing great. And then as we roll through here, so hopefully I'm giving you an idea of just how to sort through some stuff very quickly. Find what's good and working and try and avoid what's not working. So here's Sempra Energy, multi-utilities breaking out here. And again, this thing pays a dividend of 2.6 or 2.7, but the chart shape is beautiful. And as long as that keeps going, I think you want to own it. Sanderson Farms, this one looks like it wants to run as well, pausing a little bit here near the prior highs, pulling back to its 10-week. I'd probably use that as support level, and as long as it keeps above that, you could own it. General Mills, well, all of a sudden Cheerios is taken off to the upside here after kind of 2 months of trading sideways. So more initiative there and a yield of 3.7. Can't even pronounce the name, Bachacho or something like that. But this one's clearly starting to shoot up here. Momentum has turned positive. Scooter ranking above 75, so that looks good. Spark Energy, I like this, making a new 52-week high, pulling out of a base yield of 7%. Scooter ranking starting to perform. Nothing wrong with that. And one thing I was surprised at is both the solar and fan ETFs, so TAN and FAN, are both holding up very, very well. And maybe that's because they're starting to price more like utilities instead of growth. I don't know. But I mean, their stock price can move very, very quickly. Anyway, so don't drop those off your radar. Speaking of which, here's Vivant Solar, breaking out or trying to break out to new 52-week highs, but clearly getting above this base that it's been establishing. So some opportunities here, perhaps. Cormark Holdings, I think these are food distributors, yeah. And then here we are sitting around $40. That chart looks great. Trying to move higher, and again, we're in a defensive area. The yield's a little too light for me, so probably avoid it. But Southern Company, here's a yield of 4%. This thing looks like it's up and away. Nothing wrong with that. And at least you're going to get cash flow. Okay. WEC Energy. So this is another multi-utility. I really like these. The chart shape doesn't really have big pullbacks, so you don't feel like you're going to get smoked if things don't work out. But the more important thing usually is that you're just trying to collect a yield. Well, I'd like it to be a little bigger than that, but again, the chart is still just grinding higher here, so nothing wrong there. American Electric, same idea. Nextra Energy, you get the idea. These are nice, smooth chart shapes. Smuckers, this one's taken off to a new 52-week high a while ago. I can't imagine that jam is going to go much higher than $130, but anyway, I'd probably wait on this one just because you're at prior resistance, even though the scooter ranking is starting to pick up. Maybe it's got more jam in it, but I don't know. Mondelez, this one's really been breaking out of this base. So this one I think could run up quite nicely. It's already run a bit. Might need to pull back to the 10-week to get involved. XL Energy, same idea. Yield of 2.6. Coca-Cola European. So hopefully that just gives you some ideas of names to go through. And again, let's go back and how did I get into that? So I went through the technical scan workbench. I just picked, and the first clause has to have nothing in front of it. So group is utility sector or group is consumer staples. And the way you go find those, just to make sure you get the spelling right, is you go down here and here's consumer staples sector, and you just click on this rather than having to pull up each individual one. But you click on it and hit add. Now it's going to put it at the bottom here. But the idea is that just put these together and run a quick, simple scan, and then save it into some sort of a chart list. And again, I've got a whole bunch of chart lists. Let me just go to the top here. I've got a whole bunch of chart lists, all saved by industry group. And in this particular case, I just called this one utilities and consumer staples and put it in there. So you can do whatever style you like, but for me, I put them all with the same number at the front, then their initial, and then the name of the whatever group I'm trying to define. So here's toys, if that was important to me. I went in and looked at nuclear uranium today. There's nothing really in there. So hopefully giving you some ideas on how to use the tools. Okay, let's go talk about Brexit. And we've got our Prime Minister resigning in Britain. So that I wondered if that would add a little bit more problems to the chart. The chart's already got enough problems. We are stuck here range bound for a couple of years here. We didn't get back up to test the prior highs like we did in France. So this chart's a little bit weaker, and we actually made our high 2 weeks before the US market did, 1st of May. And this is starting to pull back, and you can see the volatility starting to increase here. But it's trying to hold up around the 20-week moving average, which would be the center of the Bollinger Bands. But if this is going to roll over here with a PPO sell signal, say next week or whatever, we'll see it for month end. But this doesn't look like it's got a lot of momentum, and I think a directionless UK would probably weaken as well. So we're going to find out how that's going to work out very soon. The one chart that's more interesting is this Australia chart. And the big thing on this Australia chart is look at this breakout here. All of a sudden, I mean, it came up, pulled back for 3 weeks, and then last week had a big week, and then this week had another huge week. And so one of the questions I just mentally ask is, is it because perhaps China will get Western goods through Australia, or how will that work? Anyway, it does make me wonder. And one of the other charts in the area that's doing quite well, it didn't finish the week as well, is Russia, which is right here. And so it jumped up and then pulled back here, but it's at new 52-week highs and still pushing it up. And we're not seeing that on some of the other markets. At the end of the month, which is next Friday, obviously, I'll go in and do a monthly market review, or the review of the end of the month. And Martin Pring will also have a review next week too. So if you like his work, you'll be able to see it there. Okay, next I want to get into, maybe it's in this chart list. Let me just go see. Yeah, so this is a chart that I pulled up the other day, and this is the 3-month bond or treasury yield. And what you see here is back in 2000, it rolled over and went below its 40-week moving average. In 2007, early, it kind of rolled over. It didn't really leave the line until later in the fall. And then here, this week, it is actually starting to get down to touch the line. And I think the line is at 22.89, and we're at 23.02. So very close to starting to touch the moving average there. So again, watching the 3-month rollover. And just if I have that chart for you, I think it's this one. It's the one before. Okay, and so what I want to show, no, I missed it. Okay, this is the chart. What I want to show is that when the yield curve starts to normalize, so in other words, the spread between all of the yields starts to spread out again, when that starts to happen, that's actually problematic. So even though somebody's saying, "Oh, we haven't crossed again," and so the 5-year hasn't crossed in front of the 10-year, or the 3-month hasn't crossed in front of the 10-year or the 2-year. Actually, it doesn't. That's not so important. What is important is when this actually starts to fan out again. That is when the yield curve resumes its normal shape. That's a bigger deal. So we're kind of watching that chart, and it is starting to do that. Okay, lastly in here is the Japan, Bank of Japan buying days. And the point I want to make on this chart, so every one of these red lines is a day that they buy bonds or ETFs. And so I started tracking this in December. But what you see here is back in December, they were buying about 9 times or something during that big downtrend in December. Well, they've already bought 9 times since the last day of April. And this is getting quite aggressive. So they buy 700 million on every one of these red lines. So they're over 5 billion for the month already. And well, including the April 31st. And so April 30th, I guess. Anyway, the important thing here to watch is that they are doing everything they can to try and support this 21,000 level. And I think it's a pretty strategic level from a chartist perspective, just to be aware of if this is going to start to weaken, that we want to be aware of that happening. It also tends to mimic market tops in the US and Germany and Japan. When they all kind of roll together, it's a pretty important place on the chart. So that's why I'm focused on that so much. But I think just, if I open up this chart a little bit more, just add a year to it, I don't have the data back there. But the point I want to make here is, it's really starting to pick up in intensity again after 3 or 4 months where it wasn't so intense. So they're starting to work pretty hard at trying to keep everything going. Okay, lastly, here's the S&P as the morning goes on here. We got up to a little bit of resistance, and I wondered if we would fail or if we'd get up to this 28.55, but it looks like we're going to give it back. If we end up finishing on the close, this is the type of bearish week that I would expect sets up for a bigger pullback going over the next 3 weeks or a month. Our next Fed meeting is middle of next month. And so, and we also have quadruple witching on that same week. So lots of price action heading into the middle of June. And we'll see if the Fed starts to get a little more dovish or if they continue their stance of everything's fine and the market kind of threatens them before that meeting. So with that, thanks for taking the time to listen to Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific time on Stock Charts TV. You can also catch replays of the Stock Charts YouTube channel or on Stock Charts TV, which has a running list of technical charting informational shows.
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at seattlemoneyshow.com.